Donald Trump tweeted this week that the US-China trade war is a beautiful thing to watch. His view is that Washington is combating China's sharp practices while helping attract massive amounts of money into the US through investments. But key data from the trade war is telling an almost opposite story. If you look at the numbers alone, it is very difficult to make the argument that the US is winning. In the year to the end of June, US exports to China slumped $33 billion or 21%. Chinese exports to the US, by contrast, actually grew a little, rising 1% or $4 billion. In July, according to numbers just announced, China's surplus with the US grew still further. And over the first 7 months of the year, China's total surplus was worth a hefty $168 billion. This is exactly the outcome that Mr. Trump was determined to avoid when Washington imposed a flurry of tariffs against China last year. And the relative lack of pain being felt by China could also go some way to explaining why Beijing seems fairly nonchalant when it comes to negotiations with the US. It's clear that Washington wants to talk. Larry Kudlow, the top White House economic advisor, said this week that the US side was preparing the Chinese negotiating team to come over in September. He also held out the possibility that there could be some softening in Mr. Trump's threat this month to impose new tariffs on Chinese goods worth $300 billion. For now, though, Beijing is not sounding too keen to concede to Washington's demands.